But if you're a long-term holder investor, you would take the Warren Buffett approach and you would say, well, if one of those crypto stable coins crashes and Bitcoin gets driven down, by a factor of 2, I'm a buyer. Stay humble, stack sats, in an homage to Matt Odell and all of the Bitcoiners who have known for the past decade that if you're going to arrive early to a revolutionary technology that's and the first digital commodity that's monetized in the history of the world, you're going to be in for a bumpy ride. So Bitcoin has been a continually bumpy ride for the past many years. I think even since we got into the market, it's gone through nearly 3 cycles. And the only rational way to approach this is dollar cost averaging. So MicroStrategy is in essence just dollar cost averaging into Bitcoin. Our strategy is we acquire Bitcoin, we hold Bitcoin, and we just happen to believe that 100 years from now, Bitcoin is like Manhattan, and you're just going to want to hold as many blocks of Bitcoin as you can. So our strategy is simple, right? We acquire Bitcoin, we hold Bitcoin, we don't sell Bitcoin, right? The only mistake you can make is acquire it with so much leverage that you get forced liquidated on a drawdown, and that's a mistake. You don't want to get stopped out. And then the other mistake is to stop acquiring, right? And in this particular case, if I look at all the options, there's no better option. Bitcoin is the least risky strategy that we can find. If we're acquiring real estate in Africa or Asia or South America, what could go wrong there? If we bought stocks, there are plenty of stocks that are down 80%. And if you bought something that, that's on the wrong side of some government policy, then that can work against you. And, if we just kept buying gold, it's just going nowhere one way or the other. Yeah, well, when I think about the way that the price changes, I think there's the demand side and there's the supply side. So if I was building a model, it would be a multi-dimensional, multivariate, nonlinear dynamic model. It wouldn't be a single variable linear model. It wouldn't even be a single variable dynamic model. So I think it's indisputable that the halvings have an impact. That is, when you cut the block rewards in half every 4 years, that has a positive impact on the price because that cuts the supply that's being sold in the open market by the miners or the supply that's out there. So I think that's one element. But my model for the price of Bitcoin is it's a function of adoption and it's a function of technology utility and it's a function of inflation. All 3 of those. And then it's presumably a function of time, especially in the sense that over time, the supply hardens, right? And Bitcoin mining supply decreases because of the halvings. And I think we expect something next year in the year 2023. It could be early next year if we're fortunate. But a lot of CFOs and a lot of CEOs are watching that. That has an impact on the way you report your P&L and your balance sheet. I think another interesting milestone is the availability of a spot ETF. And a big milestone that we should keep our eyes on is what happens with regard to the Grayscale, the GBTC application to become a spot ETF. Because there's a deadline coming up in July, in early July. I don't have the exact date, July 10th, July something. And right now there's a process going on and the SEC has allowed individual investors to weigh in on this. And something like 11,500 letters have been submitted to the SEC, 99% positive, maybe 99 more than 99% positive. Overwhelmingly positive in favor of a spot ETF. I think that if the SEC grants that, that will be the first spot ETF in the history of the industry, which is important for a couple reasons. A, it's enormously legitimizing for Bitcoin. B, there are a lot of people that they want to hold the security in the form of an ETP. It would be. The third is that accounting catch is a problem for commodity or for the property accounting. But if you were holding the security, you would have fair market accounting. So a company that wanted to own $1 billion of Bitcoin in market to market and fair value, they could do it through a spot ETP, but right now there is no spot ETP. So I think that that will help with institutional adoption. I think that the third thing is we're waiting on some joint guidance from CFTC and SEC regarding digital assets. I think institutions are very sensitive to that. I think the fourth thing is we're starting to see more banks get involved in custody. I think by the end of the year, we'll see some large banks that allow you to custody your digital assets like Bitcoin with them. First of all, MicroStrategy is a publicly traded company, and we have a public disclosed strategy, which is we acquire Bitcoin, we hold Bitcoin, and it's a long-term strategy. And it's very important for us to be transparent and committed to our strategy. If I told you that our strategy was we acquire real estate in London, commercial office buildings in London, and we hold them forever, and you were an investor of mine, and you wanted to have 5% of your portfolio invested in London real estate, then you would want me to stick to that strategy. And if you ever saw in an interview that I said, I like London, but I'm also buying, vacation villas in Ibiza, and I'm buying container ships in Brazil, you would think, I can't trust that company. I don't know. I don't want to own container ships in Brazil. It doesn't matter whether you made money or lost money. You need to be true to your strategy and committed if you're a public company. And the public markets reward you for integrity. The world wants a digital currency, right? There's $1 trillion demand for digital dollars. People want them desperately. They want them in Turkey. The short-term inflation hedge in Turkey, right, is the digital dollar, right? If you want an inflation hedge for the next 4 weeks or 8 weeks. So there's a massive demand for tokens that are digital currency, but there's a big difference between, say, UST. UST might have been 1% to 5% backed, right? Like it literally was under.
It was algorithmically backed, yeah.
Yeah, or not backed at all. Versus Circle. But if you're a conservative investor, you don't want to hold Circle or Paxos. You want to hold an FDIC issued endorsed stable coin, where you have JP Morgan's balance sheet behind it. So we're early on in the industry. There's a massive demand for currency, but it's hard to figure out how I create one. How do I create $100 billion of digital currency that will be universally accepted? And so there's a little bit of, there's uncertainty there. I think that in the near term, the Bitcoin price suffers pain from the deleveraging and from the collapse of other parts of the crypto ecosystem in the near term. So when UST collapsed, that wasn't good for Bitcoin, right? And when if you have other tokens that collapse, then they're cross-collateralized with Bitcoin. So the failure or the collapse of a crypto hedge fund like Three Arrows, the failure or the collapse of a crypto bank like Celsius, and the collapse of a crypto token like Luna, all of these things are negatives in the near term. I think that the ideal stable coin that you want to hold is one that's backed by cash equivalents, and they disclose the assets they have every week or every day. So that transparency builds confidence amongst investors. If they only disclosed once a year, much less confidence. If they never disclosed, right, not much confidence at all. So I think that you've got some stable coins that have more disclosures, right? On one end of the spectrum is Circle and Paxos, those kind of stable coins. They're kind of regulated entities in the US. They're one step below a bank. An FDIC approved bank would be one step higher, but they're one step down. So they have the least amount of uncertainty. Tether is, I think, regarded by many people as, a well-run, successful crypto venture, right? But they're not as transparent, right, with their holdings. And so that puts them in a second bucket. And they're being tested by the market, right? People are testing that because they will always test you. I think that if you're a trader, right? We can't really sugarcoat it. If you're a trader and your time horizon is less than 12 months, and if a crypto exchange crashes, if a crypto hedge fund crashes, if a crypto token crashes, if a stable coin crashes, it's not good for the entire ecosystem. And Bitcoin is going to suffer from some of that volatility in the near term. But if you're a long-term holder investor, you would take the Warren Buffett approach and you would say, well, if one of those crypto stable coins crashes and Bitcoin gets driven down, by a factor of 2, I'm a buyer.